Welcome back to World Finance Pulse, where we dedicate our focus to exploring the nuanced developments, active discussions, and speculative currents that shape the global conversation around emerging market currencies. Among the most enduring and closely watched topics in this space is the Iraqi dinar, a currency that has captivated a diverse coalition of retail investors, long-term holders, and amateur analysts for well over a decade. Here in 2025, interest in the dinar shows no signs of fading. On the contrary, it appears to be experiencing a notable resurgence, fueled by a convergence of economic narratives, unverified reports, and grassroots enthusiasm across digital forums, social media platforms, and private investment communities. It is essential to state clearly at the outset that the content we are about to explore is not presented as financial advice, nor does it constitute confirmed market intelligence or verified institutional reporting. Instead, what follows is a comprehensive examination of the stories, claims, and interpretive frameworks currently circulating among those who track the Iraqi dinar with persistent attention. These individuals, many of whom have followed Iraq's fitful economic recovery since the aftermath of the 2003 invasion, describe what they perceive to be shifting conditions within the global foreign exchange landscape, conditions they argue could serve as precursors to meaningful changes in how the dinar is valued, traded, and perceived on the international stage. Some of these viewpoints are offered by seasoned observers who have spent years monitoring Iraq's monetary policy decisions, central bank communications, foreign reserve accumulation, and halting efforts to modernize its banking infrastructure. Others originate from less formal sources, online forums, encrypted chat groups, and invitation-only networks where speculation often merges indistinguishably with the interpretation of fragmentary market data. Whether one approaches these claims with skepticism, curiosity, or cautious interest, it is undeniable that the conversation surrounding the Iraqi dinar has entered a new and more intense phase. The purpose of today's feature is to explore these developing narratives in granular detail, to explain why certain holders believe the current moment carries unique significance, and to contextualize the broader economic and geopolitical factors that these communities routinely invoke as evidence of impending transformation. According to widely circulated commentary within dinar watching communities, again, it must be stressed, this does not represent verified institutional data or officially confirmed market activity. Multiple unverified sources allege that traders, independent market analysts, and even individuals with alleged ties to the banking sector are observing subtle but persistent shifts in how the Iraqi dinar appears on various currency monitoring platforms and Forex tracking tools. These reports, which have proliferated across Telegram channels, YouTube broadcasts, and private Discord servers, often describe what their proponents interpret as early-stage signals of institutional repositioning, incremental valuation movement, or preparatory adjustments within back-end banking systems. A particularly persistent strand of this discourse suggests that large holders of dinar are often referred to in community slang as early investors, whales, or Tier 1 participants may be in the process of quietly adjusting, exchanging, or restructuring portions of their currency holdings. These activities, it is claimed, are occurring in response to internal rate changes visible only through specific bank portals or proprietary valuation systems not accessible to the general public. While such claims cannot be independently substantiated and frequently originate from anonymous or pseudonymous sources with no verifiable track record, they nonetheless remain central to the contemporary dinar narrative ecosystem. Supporters of these theories routinely cite anecdotal evidence drawn from trading group screenshots, second-hand remarks attributed to unnamed insiders, or cryptic references made by figures who claim to possess privileged knowledge of Iraq's monetary roadmap. Critics, by contrast, point out that in the absence of transparent documentation, audited financial disclosures, or formal announcements from recognized monetary authorities such as the Central Bank of Iraq or the International Monetary Fund, These assertions should be treated with extreme caution. Yet despite such skepticism, or perhaps because of the persistence of these unverified reports has contributed significantly to the momentum of current discussions. It has fostered a climate of heightened anticipation among those who have held Iraqi dinar for years, sometimes decades, in the hope of eventual appreciation. Whether these scattered reports reflect genuine institutional activity, isolated anomalies, or simply a fresh wave of community-generated excitement remains an open question. What is clear is that they have succeeded in fueling a growing and increasingly vocal conversation about what 2025 may hold for a currency that has long existed on the margins of mainstream financial attention. A significant number of Forex observers who participate actively in dinar-focused discussion spaces point to what they characterize as steady, deliberate, and structurally consistent movements in the currency's behavior across certain trading platforms and exchange rate monitoring interfaces. These movements, they argue, bear little resemblance to the erratic fluctuations typically associated with retail speculation, sudden news-driven spikes, or short-term trading anomalies. Instead, they interpret these changes as potentially indicative of deeper currents, namely, the quiet but growing participation of institutional actors whose market activity follows different rhythms and responds to different incentives than those of individual retail traders. Proponents of this interpretation frequently assert that when trading volume increases according to a discernible and sustained pattern, particularly when that volume appears to accumulate over multiple consecutive days or weeks, it strongly suggests the involvement of major financial players. These could include regional commercial banks adjusting their currency positions, investment funds diversifying into hard-to-source assets, or even government-linked entities conducting operational testing ahead of potential policy shifts. Such interpretations, however compelling they may appear within the echo chambers of dedicated forums, remain entirely speculative in the absence of direct confirmation from centralized trading authorities, exchange operators, or regulatory bodies with oversight over such transactions. Some enthusiasts go further still, suggesting that the patterns they claim to detect align closely with historical precedents drawn from other nations that have undergone controlled currency adjustments. They cite examples from the revaluations of the Kuwaiti dinar following the First Gulf War, the gradual appreciation of the Chinese renminbi during the 2000s, and even certain episodes in post-conflict economies where early, subtle indicators preceded official policy announcements by months or years. In these readings, central banks typically prepare the ground for adjustment by tightening monetary controls, modifying internal accounting procedures, influencing interbank liquidity conditions, or issuing quiet guidance to commercial partners. Nonetheless, it must be emphasized with absolute clarity that the broader international financial community does not recognize any confirmed revaluation process currently underway with respect to the Iraqi dinar. Mainstream economic institutions, global banks, and accredited currency analysts have issued no statements supporting such claims. Yet within dinar-watching circles, these perceived patterns, whether real or imagined, verified or anecdotal, serve to reinforce long-standing beliefs that gradual, almost imperceptible changes in trading volume, price behavior, and liquidity conditions may in fact be early indicators of more consequential shifts still to come. Supporters of the increasingly widespread narrative that 2025 represents a uniquely pivotal year for the Iraqi dinar frequently anchor their arguments in detailed references to Iraq's ongoing, and in some respects genuinely ambitious, economic reform agenda. Over the course of the past several years, Iraq has invested considerable political and technical capital in efforts to rebuild degraded infrastructure, stabilize a financial system long plagued by inefficiency and corruption, expand the reach of digital banking services into underserved regions, and diversify state revenue streams beyond the historically dominant hydrocarbon sector. Enthusiasts monitoring these developments often highlight specific data points and policy announcements as evidence that the country is methodically preparing for a stronger, more credible international financial presence. They cite reports indicating a measured reduction in the domestic money supply, improvements in the central bank's foreign currency reserve adequacy, and incremental adjustments to internal monetary policy frameworks as signs of intentional positioning. Some interpret these developments as essential prerequisites for aligning Iraq with the operational standards of modern global financial networks, including upgrades to anti-money laundering compliance systems, participation in international settlements infrastructure, and the adoption of cross-border banking protocols consistent with those used in more developed economies. While many of these reforms are indeed real, publicly documented, and acknowledged by institutions such as the World Bank and the IMF, their direct implications for currency valuation remain subjects of vigorous debate among professional economists. The proposition that administrative reforms, reserve accumulation, or even improved compliance ratings automatically translate into a sharp, sudden revaluation of a national currency is widely disputed within mainstream economic discourse and is not supported by empirical evidence from other national experiences. Within dinar-focused communities, however, these same reforms are routinely framed not merely as positive developments but as indispensable preconditions for what supporters believe will be a gradual, deliberate, and ultimately sustainable appreciation trajectory. By connecting each incremental reform, each new compliance directive, each updated reserve statistic, each modernization initiative to a larger, emotionally resonant narrative of national economic ascension and redemption, supporters construct a compelling case for why they believe the dinar is now embarked upon an upward path. It is a narrative powered less by rigorous monetary analysis than by pattern recognition, hopeful inference, and the desire to impose coherent meaning upon fragmentary and ambiguous information. Even if such conclusions remain speculative rather than grounded in confirmed monetary policy, they continue to shape expectations and sustain engagement across the online communities that track these developments with unwavering attention. Within the online ecosystems where the Iraqi dinar is discussed most intensely and continuously, one of the most persistent and emotionally charged themes involves speculation surrounding the existence and activity of so-called tiered investors. These individuals, sometimes referred to in community parlance as Tier 1 or Tier 2 holders, are rumored to possess access to adjusted, preferential, or otherwise non-public exchange opportunities that are not available to ordinary currency holders. The reports circulating within these spaces frequently allege that such exchanges occur quietly, often within the confines of specialized private banking environments or through relationships with specific financial intermediaries who have been authorized to facilitate limited transactions. These activities, according to the narrative, are not arbitrary or opportunistic but are instead designed to serve specific technical functions, testing the readiness of banking systems, managing liquidity conditions in a controlled manner, and verifying operational protocols before any broader, publicly accessible adjustment is introduced. It is imperative to reiterate that there exists no verified documentation, no audited financial record, and no official acknowledgement from any recognized financial institution supporting the existence of such preferential redemption programs. Mainstream financial institutions, including the Central Bank of Iraq, major international commercial banks, and global regulatory bodies, do not acknowledge such programs and have issued no statements that could be reasonably interpreted as confirming their operation. Nonetheless, the belief in tiered access persists with remarkable tenacity across certain segments of the dinar community, functioning less as a testable hypothesis than as an article of faith. Enthusiasts who propagate this narrative often argue that modern currency adjustments, particularly those undertaken in complex geopolitical and economic environments, necessarily unfold gradually and with extensive behind-the-scenes coordination intended to prevent market disruption, capital flight, or speculative bubbles. From this perspective, discrete activity among large holders is not merely plausible but practically inevitable, serving as a precursor to any public-facing change. Critics counter these claims by noting that major currency policy changes, when they do occur, are almost invariably announced publicly and transparently by central banks through formal communications channels, press releases, and policy statements. They argue that the notion of covert, preferential exchange windows operating outside regulatory oversight contradicts fundamental principles of monetary governance and financial transparency. Yet despite these objections, the tiered investor narrative has become so deeply embedded in dinar discourse that it now functions as a central organizing theme, shaping how many holders interpret current conditions and reinforcing the conviction that early, limited adjustments may already be quietly foreshadowing broader developments yet to be revealed. Another recurring and vigorously debated topic within speculative dinar circles involves the interpretation of reported increases in trading volume, which some community-tracked data sources describe as rising by hundreds of % on certain days or during specific trading sessions. Those who follow these narratives closely often interpret such purported volume spikes as definitive proof of institutional participation, systematic preparation for anticipated adjustments, or both. Their reasoning follows a consistent logic: retail traders, even when acting in coordinated waves of enthusiasm, simply do not command the capital necessary to generate volume increases of this magnitude. Therefore, any significant, sustained shift in observed trading activity must necessarily involve larger, better capitalized entities such as regional commercial banks, sovereign wealth funds, international investment firms, or government-linked financial institutions executing strategic mandates. Once again, it is essential to underscore that these interpretations remain entirely speculative and rest upon data that cannot be independently verified against publicly available Forex reporting systems or centralized exchange records. The proprietary or anonymized nature of the data sources cited within these communities makes external validation impossible and leaves ample room for confirmation bias, selective reporting, and unintentional error. Nevertheless, supporters of the revaluation narrative contend that when large financial players adjust their currency positions in a coordinated or sustained manner, it often reflects either privileged knowledge of impending policy changes or rational positioning based on observable macroeconomic trends. They frequently pair this conclusion with expansive geopolitical and macroeconomic discussions that touch upon Iraq's strategic role in global energy markets, its evolving partnership with neighboring states and major powers, and its ongoing technical negotiations with international financial organizations regarding debt restructuring, reserve management, and developmental lending. Some of the more ambitious speculative threads even incorporate unverified, often entirely uncorroborated chatter about the possibility of Iraq pricing certain oil export contracts in dinar rather than the long-standard US dollar, or a shift that, if implemented, could theoretically generate structural increases in international demand for the currency and exert sustained upward pressure on its value. No major financial authority, energy market analyst, or sovereign credit rating agency has confirmed any such shift, and the proposition remains firmly within the realm of speculation. Yet these narratives, however unsubstantiated, continue to exert powerful influence over community expectations and interpretive frameworks. They form the conceptual foundation upon which many observers base their belief that 2025 may represent a genuinely transitional moment for Iraq's currency, at least within the bounded, self-referential world of dinar speculation. Over the course of the past 24 months, Iraq has undertaken a series of ambitious, structurally significant reforms aimed at fundamentally transforming its long-troubled financial landscape. These efforts, which have attracted varying degrees of attention from international financial institutions, regional banking authorities, and sovereign credit analysts, are frequently interpreted within speculative currency communities as compelling evidence of a decisive shift in the country's economic posture and developmental trajectory. Among the most prominent of these reform initiatives are intensified campaigns to investigate, expose, and remediate corruption within Iraq's financial sector, including high-profile inquiries into irregular banking practices at both public and private institutions. Concurrently, Iraqi regulatory bodies have moved to tighten supervisory controls over licensed private banks, imposing more rigorous compliance frameworks designed to align domestic financial operations with internationally recognized standards. These include enhanced anti-money laundering protocols, mandatory digital auditing systems, and cross-border transaction reporting mechanisms intended to increase transparency and reduce opportunities for regulatory arbitrage or illicit fund movement. For many observers, particularly those predisposed to view Iraq's reform process through an optimistic lens, these steps are seen as essential, long overdue prerequisites for fuller integration into the global financial architecture. Additionally, recent reports indicate that Iraq's combined holdings of foreign currency and monetary gold have grown substantially, with some estimates suggesting that total reserves have now surpassed the symbolic and substantively significant threshold of $100 billion equivalents. This achievement is widely interpreted within dinar-focused communities as a clear signal of strengthened economic resilience, enhanced monetary policy flexibility, and improved capacity to defend the national currency against external shocks. Communities that track the dinar with particular intensity often argue that such a robust reserve position suggests a newfound capability to support currency stability over extended time horizons, potentially creating conditions conducive to gradual, managed appreciation. While interpretations naturally vary across different segments of the community and among individual participants, a broad consensus has emerged among supporters that recent Forex behavior, when considered alongside these internally driven reforms, reflects a coherent and accelerating pattern of fundamental strengthening. This pattern, in their view, carries meaningful implications for how Iraq's currency may interact with international markets in the months and years ahead, influencing everything from bilateral trade settlement practices to foreign investment flows and sovereign credit perceptions. For those who have held Iraqi dinar over extended periods, in some cases stretching back to the years immediately following the 2003 invasion, in others dating to subsequent episodes of renewed optimism, the current atmosphere has generated a powerful and growing sense of renewed anticipation. Some long-term holders describe this period as the most promising they have witnessed in years, if not since their original decision to acquire the currency. Within certain speculative circles, persistent but unverified claims have emerged suggesting that early conversions, selective exchanges, or limited redemptions are already occurring through restricted, invitation-only private banking channels. Such claims, it must be repeated, are not publicly verifiable, have not been corroborated by any independent financial authority, and should be approached with the highest degree of caution. They rest entirely upon the testimony of anonymous or pseudonymous sources whose credibility cannot be assessed and whose motivations remain opaque. Yet within the communities where these narratives circulate and gain traction, such early phase activities are frequently characterized not as anomalies or red flags, but as entirely standard features of what believers hold to be a deliberate, professionally executed modern revaluation strategy. This strategy, according to its proponents, necessarily unfolds through gradual, tightly controlled stages, each designed to test specific aspects of system readiness, liquidity management capacity, and the operational stability of participating banking infrastructure. Enthusiasts advancing this interpretation argue that stringent internal verification protocols, stress tests, and limited-scale transaction exercises almost invariably precede any broader public rollout. These preliminary phases, they contend, allow financial institutions to identify and resolve operational vulnerabilities, ensure that reserve buffers are sufficient to accommodate increased demand, and build confidence among early participants whose cooperation may be essential to the success of subsequent stages. Skeptics, however, continue to emphasize that without formal, attributable confirmation from major financial institutions, multilateral organizations, or the Central Bank of Iraq itself, such reports remain at best anecdotal and at worst deliberately misleading. Regardless of where the truth lies, these narratives have undeniably achieved widespread circulation and have reinforced, within significant segments of the dinar-holding population, a firmly held conviction that critical processes may already be unfolding behind the scenes. beyond public view but none less consequential. Whether grounded in verifiable policy developments or community-generated speculation, the momentum of discussion has intensified palpably, and many early investors interpret this momentum, whether real, perceived, or some combination of both, as an affirmation of years, even decades, of patient waiting. The atmosphere surrounding the dinar, irrespective of its factual foundation, has become markedly more active, more energized, and more suffused with a sense of approaching resolution than at any point in recent memory. Notwithstanding the palpable sense of progress and gathering momentum that has come to characterize speculative discourse around the Iraqi dinar, many experienced voices within these communities continue to emphasize the critical importance of caution, skepticism, and disciplined risk management. History offers sobering lessons: periods of heightened activity, intensified media attention, and elevated excitement around currencies, particularly those that are the focus of extensive online speculation and organized investment narratives, have consistently attracted opportunistic actors seeking to exploit hopeful but insufficiently informed investors. As such, a recurring theme across virtually all responsible dinar-focused forums, channels, and discussion groups is the urgent recommendation to conduct any and all currency-related transactions exclusively through officially licensed, regulated financial institutions or through verified government communication channels. Advisors within these communities strongly warn against engaging with unverified individuals, unregulated private entities, or online platforms offering special preferential rates, expedited processing, or purportedly insider access to restricted exchange opportunities. Such offers, which tend to proliferate precisely during periods of heightened anticipation, frequently serve as vehicles for fraud, misrepresentation, and financial loss. Practical guidance commonly disseminated within these communities includes maintaining physical currency in secure, organized storage, preserving original purchase receipts and transaction records, documenting chain of custody and ownership history wherever feasible, and remaining continuously alert for official public announcements issued through recognized governmental or financial authority channels rather than relying upon rumors, leaks, or second-hand reports circulating within unverified networks. Many observers also counsel against overinterpreting routine Forex movements, noting that even when daily fluctuations range between 1 and 5%, a range sometimes cited by enthusiasts as evidence of deliberate micro-adjustments, such shifts may simply reflect normal market dynamics, seasonal liquidity variations, or retail trading activity rather than signaling broader structural changes in currency policy. While enthusiasts sometimes interpret these fluctuations as intentional, carefully calibrated steps meant to guide the dinar incrementally toward what they believe to be its equilibrium or true value, others caution that such interpretations, however sincerely held, rest upon inferential leaps unsupported by confirmatory evidence. The overarching message, repeated across diverse segments of the community, remains consistent and unequivocal: exercise patience, maintain situational awareness, and avoid making consequential financial decisions based upon unverified claims, no matter how persuasive or widely repeated they may be. Among the most committed and vocal supporters of the revaluation narrative, the prospective adjustment of the Iraqi dinar is understood as representing far more than a simple, mechanistic alteration of an exchange rate. Instead, it is framed as an event of profound symbolic and structural significance, marking nothing less than Iraq's long-awaited re-emergence as a stable, credible, and competitive participant within the integrated global financial system. Proponents of this view argue that Iraq's underlying economic foundation is supported by some of the world's largest proven oil reserves, expanding energy production and export partnerships, and a sustained, multi-year campaign to modernize financial regulatory infrastructure has strengthened substantially and cumulatively over the past decade. From this vantage point, a controlled, officially sanctioned revaluation would signify not merely a technical monetary adjustment but also a formal, internationally recognized validation of Iraq's intensive efforts to implement regulatory reforms, elevate banking transparency standards, combat institutional corruption, and cultivate durable, mutually respectful relationships with international financial institutions and sovereign partners. These observers contend that the cumulative progress achieved across multiple dimensions of economic governance has begun to restore confidence among a select cohort of foreign investors, sovereign funds, and institutional asset managers. In this reading, the perceived upward trajectory of the dinar, however modest, halting, or difficult to verify, operates as a form of confirmation, validating the judgment and patience of those who maintained exposure to the currency through extended periods of uncertainty, violence, political instability, and institutional dysfunction. Critics of this narrative, while often acknowledging that Iraq has indeed achieved measurable improvements across certain indicators, caution that claims about imminent, large-scale, or structurally transformative rate changes remain entirely unverified and, in the absence of official confirmation, inherently speculative. No credible monetary authority has signaled such an adjustment, and the evidentiary basis for expecting one in the immediate future remains, at best, fragmentary and circumstantial. Yet the belief persists, resilient and largely undisturbed by skeptical counter-argument, that Iraq is now entering a phase in which its national currency could begin to assume a more meaningful, active role in both regional and global markets. Whether one approaches this belief as aspiration, reasoned speculation, or unwarranted optimism, its significance within the communities that hold it cannot be overstated. It functions as a lens through which economic data, policy announcements, and market movements are filtered and interpreted, lending coherence and emotional weight to what might otherwise appear as disconnected, ambiguous developments. The anticipated appreciation of the Iraqi dinar, according to the speculative circles that have devoted the greatest attention to modeling its potential effects, is frequently described as carrying implications